Today we're going to be talking about what exactly a stock and a bond is. Super sexy stuff. Hey guys, welcome back to another video. Today we're going to be talking all about what stocks are and what bonds are, and more specifically what that means for you when you go to invest your money. So let's go ahead and dive in with some basics of what stocks are. Before we do that, if you are new to investing, I highly recommend looking into the series that I did all about how to open up your brokerage account and how to choose an ETF. That is important to understand, like how easy that process is. And then I want you to come back here and learn what specifically you're actually putting your money into. So time out. Remember when Facebook was first officially publicly traded and it was such a big deal, the IPO, the initial public offering? That was such a big deal because they were now officially open to any type of investment. Before it was only private investments. Now it's open to like people like you and I. We can put our money into Facebook. That's why it was such a big deal. So when we're talking about stocks, what I'm talking about is publicly traded stocks. This means companies that anybody can put their money into, anybody can buy a share of. Now let's talk a little bit about what that specifically means. It's usually based off of what is the value of that company. Okay, so what's the value of the company? It's what you and I think it's worth. At the end of the day, that's where it gets its value, is what you and I believe that it's worth. So stocks are slightly based on perception in some cases. Now, the cool thing about a stock is if you and I want to invest money into a company because the company needs some extra money, maybe they're doing research and development, they're doing some really cool projects and they need some cash, they have an option. They can go to a bank and get a loan, or they can issue stock to help raise some money. So stock is a way for a company to raise money. Now, the cool thing about stocks are when a company issues more stocks, issues meaning sells more stocks, what that means is that you and I can purchase a share or 100 shares or 500 or however many shares we choose, however much we can afford, we can purchase one share of a company. When we are a shareholder, we are a partial owner of that company. So if you own a little bit of stock in Facebook, Apple, Alphabet, if you own whatever the heck it might be, you're actually a partial owner of that company. Now, it's not enough ownership to be a shot caller, but it's still pretty cool. You actually own a little section of that company. So when you buy stock, you become an owner in that company. Stock equals ownership. Pretty cool stuff, right? Okay, so that is what a stock is. Stock is only ownership in the company. When you buy a share of stocks, you're buying ownership. Now, stocks are traded in real time. Like all the time they're being traded and they're being bought and sold and all of that stuff. So when you look at the crazy stock market and you see like all this like nutso stuff, that's because it is traded in real time. Now, index funds, mutual funds, ETFs, those are traded at the end of the day. So slightly different there. Now, let's talk a little bit about bonds. Bonds are a different way for a company to raise money as well. They might be in a position where they're like, yeah, man, we're doing a really cool project. We also need money, but we don't want to sell ownership of our company. We don't want to sell ownership. So instead, we're going to borrow money. So we're going to borrow money from people like you and I, individual consumers, big firms, like whoever it might be, anybody that wants to purchase or wants to lend that company money. So when we are lending our money by buying a bond, what that means is the company says, hey, we will borrow your money, much like a car loan or a house loan. We're going to borrow money and we're going to return it at a set amount of time, at a set amount of rate of return, at interest rate, so to speak. So what happens with a bond is when you're buying a bond, you're lending your money to a company or a government entity sometimes, and you're lending them money in exchange for a guaranteed rate of return when that bond matures or officially expires, when it's like a 5-year bond. After 5 years, they're gonna give you your money back plus some in interest, okay? So that's kind of how it works. It's really quite simple. So stock is ownership, bonds are debt. When you are buying bonds, you're investing in debt. Sounds super weird, but that's basically what it is. You don't own a little piece of the company when you're a bondholder. That's just not how it works. But with a shareholder, stocks, you do. At the end of the day, the important piece is knowing what that means as an investor. So why is that important? Let's think about it. If you are taking on a little piece of ownership of a company and that company goes bankrupt, if you're an owner of a company, what does that mean for you personally? you probably don't get any money, right? Your company's going bankrupt, you don't get anything in return. So that's why it's so different. When you're taking on stocks and you're purchasing stocks, you're taking on an inherent level of risk. The company might tank, it might do great. You as an owner get to have the highs and the lows. You have no legal obligation to be paid back when you're a stockholder. Now with the bondholder, legally, the chain of command is that debt holders have to be paid back. So they're gonna sell all the inventory, all the supplies, the chairs, the desks in the office, the building. They're gonna sell all that stuff and pay back their debtors. And don't forget, bondholders are debtors. They are the ones that also have some stake in the game because they legally get paid back before shareholders. Shareholders are like down here. Like probably down here if I'm being honest, but that's how it works. One more quick thing, sometimes you hear stocks called equities. It's the exact same thing, it's just a fancy way of saying that. So you might hear, oh, I invest in equities. My asset allocation is that I'm invested in equities, which again, fancy way of saying asset allocation, how much stocks, bonds, mutual funds, index funds, cash, real estate, that's your asset allocation. How much of that is dedicated to equities or stocks? Just a fancy way of saying that. The other piece too is sometimes people will say, I invest in debt. That's what they're meaning. I'm a bondholder. I buy bonds. Why we make this stuff complicated, I really don't know. It is confusing, but at the end of the day, it doesn't have to be. It's very, very simple. And I wanted you to understand the basics of stocks and bonds and what that specifically means as an investor. All right, that is it for today. I hope this was helpful, and more than anything, I hope it helps expand your brain into what specifically that means as an investor and how it's really not that scary. You either own a piece of the company or you lend money to the company. That's pretty much all it is. Thank you so much for tuning in, and I will see you for another video in the future. Goodbye.